Okay, so I want to thank you all today. And so my name is Kathy Lien, and I'm the Director of Currency Research for GFT, as well as Managing Partner of Managing Partner of BK Forex Advisors, with my colleague Boris Schlossberg, who I believe was on last Monday, talking about the markets and trading and so forth. Usually when I give these sessions, I've given them once every other week or every other 2 weeks. They're focused on trading strategies and basically different ways to enter and exit the market, as well as different techniques that I use in general. However, very late last week, FX Street invited me on to talk about the ongoing developments in the market from a fundamental perspective. And if any of you follow my regular work, it is my forte, which is fundamental analysis. I was actually on CNBC Power Lunch last week talking about all the developments that were going to happen and how at the time BOJ intervention and coordinated intervention appeared to be imminent. So now that it has happened, there's still a lot to talk about and to discuss in regards to what can transpire for the rest of the currencies this coming week, as well as the next couple of weeks, maybe even the next couple of months. So this is a purely fundamental talk. We will look at some charts to get a sense of the key levels, and we're going to maybe take a look at them, on a technical perspective as well. This is an open forum, so I encourage you all to ask questions about the developments that have been happening, but I'll kind of guide the conversation along and give you a sense of what I think are the big stories in the markets and how the developments in Japan could affect the markets going forward. So with that, let's take a step back and just talk about how the moves last week were very, very significant. We saw both the Japanese yen and the Swiss franc reach a record high. So that's something that's very, very, very important, because usually when people think, okay, we've got a crisis, we're normally taught that when we have a crisis, like Japan has a crisis, that investors usually sell first and ask questions later. I talk about this a lot if you've attended my presentation. But what may be mind-boggling for a lot of traders is that that did not happen at all when it came to Japan. And the reason why it did not happen at all was because Japan is in a very, very different boat as from many other countries. For example, when we had the sovereign debt crisis in Europe and so forth, that proved to be very bearish for the euro. But in the case of Japan, there's a lot of unique factors about the Japanese yen that made it actually rise on bad news and not fall. Starting off, Japan is a country where most of its investors have their money abroad. And so, let me see if I have my camera on here, if I can just kind of activate my camera. I probably can't because I'm in my Windows environment. But just give me 1 second to see this, because I think it'd be so much more fun if we can see each other. Let's see. No camera. All right, that's fine. Well, in the case of Japan, basically most of their people have their money sitting abroad. So when there's a lot of uncertainty, what they tend to do is, they'll probably end up selling some of their assets, repatriating some of those funds home, or at least dumping some of their riskier holdings so that they can keep it in case they need to move the money back home. The second unique characteristic of Japan is that the yen is a notoriously cheap funding currency. Japan has been basically running a zero interest rate policy for forever, pretty much. And so as a result, a lot of people have sold yen and used that money to buy higher yielding currencies and other investments. So whenever there's a crisis or whenever investors are nervous, they usually buy back the yen and unwind their riskier trades. So there's this kind of special characteristic of the yen that causes it to rise and not fall during crisis. So as a result, Japan had an earthquake, and the earthquake was followed by the tsunami, which was then followed by their nuclear crisis. all of that drove the yen sharply higher. Confusing a lot of people, but hopefully you understand a little bit about what happens now. So, as a result, it drove the yen to a record high against the US dollar and to, significant highs against other currencies. So, the Bank of Japan and the Ministry of Finance got very, very nervous because, as you may know, Japan is an export-dependent country. So when they have a rapidly rising currency, it deals an even more significant blow on their economy than otherwise. And so because it deals a more significant blow on their economy than otherwise, they need to do something. They can't lower interest rates because interest rates are pretty much zero. They did increase their asset purchase program, but it didn't do anything to stabilize the yen. So they knew that they need to come in with something powerful. And so that's when the market started talking about the possibility of the Bank of Japan coming in and selling the yen and intervening in the currency market. But that would not be enough because as we've seen from many intervention efforts in the past by both the Bank of Japan as well as other central banks like the Reserve Bank of New Zealand, the Swiss National Bank, all of them have been unsuccessful. The only interventions that have ever worked are coordinated interventions, which are basically interventions where the Bank of Japan is not the only one that comes in. They come in with other central banks such as the ECB, the Federal Reserve, the Bank of Canada, the Bank of England. When they come into the markets together, that's when it shows how powerful the move is. A lot of times the intervention by the central banks are more symbolic than actually, putting a lot of money into the market. But it is enough. So what you should see right now here on the screen is a chart I put together. Now, this chart is a chart of dollar yen, and what I've labeled on these charts here are key significant G7 meetings. Now, what I want to point out is that G7 meetings have, in the past, effectively marked tops and bottoms in dollar yen, as well as in the euro dollar, but because we're focusing on Japan, we're talking about dollar yen specifically. So it's marked significant tops and bottoms. I mean, the most historic ones were the Plaza Accord as well as the Louvre Accord. And as you can see, that marked a top of dollar yen, the Plaza Accord, the Louvre Accord marked a bottom. Then we had some G7 meetings in the mid-90s, 95, as well as the G7 meeting in 2008, the Dubai meeting, and all of these have marked key turning points for dollar yen. Now, sometimes the turning points will happen immediately, like in the Plaza Accord. Sometimes it will take a little bit longer, like in the Louvre Accord. If I showed you, and let me just go ahead and show you the euro-dollar chart, when the last time that we had intervention. So let me just, I apologize for my screen always flipping back and forth, but for some reason whenever I'm in the Mac, the PC environment on my Mac, it just does that. Anyway, so this is a weekly chart of the euro dollar. So let's get ourselves back to 2000, and I'll zoom back into the charts here. Alright, so right now you should see the euro dollar weekly chart. This is the candle where we have the ECB intervention, and what I mentioned, this is the candle where we have the ECB intervention. Then it rolled over, made a new low before moving back higher and finding that bottom. So the question people have now is, will this scenario be repeated? Well, let me walk you through some previous intervention scenarios, and then we'll talk about whether this is the case. So I just showed you the ECB intervention and how this was basically the most recent coordinated intervention that we've had in the euro dollar since the one that we had last week, obviously. And they came in because at the time the euro dollar had hit a record low, and it was like a year, shortly after it was launched. And you can see on that day of intervention, the euro appreciated about 3%. But then, like I said earlier, it made a new record low before it actually rose again. Now, in terms of the coordinated intervention, that was semi-successful. The ECB had to come in again one other time by themselves before the euro-dollar finally bottomed. So let's take a look at another example, but there's only been basically 3 official cases of coordinated intervention in the past 30 years in the Japanese yen, and that's counting what we just had. That's obviously not counting what we just had. So prior to the intervention last week, the intervention before that was in June 1998. So let's take a look at how dollar-yen performed in June 1998. So let me change my chart. This is the yen, and I'm going to have to go to a monthly chart for now. Let's see actually if I can get a weekly chart going here, and then zoom in. Okay, wonderful. 1998 was the last time we had BOJ intervention. Okay, please, alright, let me refresh the chart. Okay, so right now you should see June 1998. Okay, let me hover my mouse over to June 1998. Alright, this is June 1998. So in June 1998, dollar-yen at the time was rising. It was rising very, very quickly. And so it was rising so quickly that it hit a record high, shortly thereafter. So dollar-yen was rising pretty much from 125 all the way up until about 140 before the Bank of Japan came into the market. So at the time, dollar-yen was coming in was rising very, very quickly. So the Bank of Japan elicited the support of the Federal Reserve to come into the market. So they came into the market on June 17, 1998, which is basically, this is a weekly chart, but you can see is this huge, huge candle here. So what happened? Well, you can see with this huge candle here, dollar-yen consolidated for the next couple of weeks, made a new record high before collapsing. So, this is basically a repeat. It's the same thing that happened in the euro-dollar, where it consolidated a bit, and the euro-dollar made a new record low before finally finding a bottom. In dollar-yen, it made a new record high before finally finding a top. And let me just show you one more case before that, which was in between July and August of 1995. Okay, so basically it's this period here. So please let me know if you see, let me just refresh this chart anyway. Okay, so this was the BOJ intervention in 1995. And that's actually the best example, I think, to the current one, because that was when dollar-yen was falling. And dollar-yen basically fell to a record low. I'll get to your questions later. And I am not reading a script. This is just coming out of my mouth. And so dollar-yen basically fell to a record low. This is the prior record low in dollar-yen. It had done that in April 1995. So obviously, like now, the BOJ was very, very concerned, and they were very, very agitated by the strength of the Japanese yen. So they decided that they were going to elicit the support of the Federal Reserve. So this was coordinated intervention with just the Federal Reserve, not the other central banks. And they came in on, they started to come in on July 7, 1995, which was basically this candle here. And they came in twice, which was once on July 7, 1995, and once on August 2nd, 1995. So let's look for August 2nd. So this is pretty much what the August 2nd period. So in this case, intervention did work, because basically they came in first around this period here. It consolidated, they came in again, and dollar-yen basically started to bottom out and had a parabolic rally. So intervention, did work at that time. let's see what it says. Writes her new script with some drama in it like a TV reality show. Well, maybe I should be on a TV reality show, but I actually was on Wall Street Warriors. Anyway, going back to this. So, the first case of intervention in the euro dollar, it did eventually work, but it took some time. The second case of intervention where dollar yen rose to a record high, it did eventually work, but it also took some time. In 1995, it did work, and it worked relatively immediately. So, let's move to now and take a look at the current dollar yen chart and start discussing about whether intervention may or may not work this time, as some of you have asked me. Okay, so this is the current chart of dollar yen, and as you can see, I'm sure all of you were watching the markets on Friday. This was the intervention candle. Let me refresh this chart. This was the intervention candle. Now, we can argue that intervention has worked in a sense that dollar yen has stabilized. It did not kind of resume its slide. But at the same time, today's move hasn't been all that impressive. Basically, the range of dollar yen has been about 70 pips. And in fact, on Friday, the dollar yen didn't manage to hold onto all of its gains. It gave up maybe about a quarter to a third of its gains. And so this leads many people to wonder whether or not it will work. So let's go ahead and actually talk about this. If we take a look at it from the perspective of volatility and what the purpose of intervention was, first of all, in terms of the moves that we've seen in dollar yen, one of the big goals of the Bank of Japan was to basically inject some two-way action in the Japanese yen. So dollar yen would not just keep on falling. And their goal was also to basically tell everyone that they have the support of central banks around the world to come into the market and actually stop the yen from falling. So I think that, because of the magnitude of what's happening right now, that this intervention effort will be much more similar to the 1995 intervention effort that we just took a look at than the ECB intervention in 2000 and the 1998 intervention. Does this mean that we're going to see a parabolic rise in dollar yen from here on forward? I don't think so. I think that what will probably happen is we'll see dollar yen consolidate probably around the 81 to 84 region. And, basically, not necessarily, I certainly don't think it's going to revisit the 77 level that we had seen last week. I think the 80 level, maybe 79.50 is going to be the bottom in dollar yen, and that over the next couple of weeks, months, that we're going to see dollar yen start to trickle higher, maybe even move back to this area here, 84. What the BOJ has effectively done is now push dollar yen into what I would call, the range trading zone. That now it's moved into a range trading mode because it's no longer about the problem, how much more the yen can rise. Now, on top of that, we're seeing some positive signs out of Japan. The Japanese government seems to be getting their hands around the nuclear crisis. They seem to be able to contain the problems that are happening at the Fukushima nuclear plant. So that also will help to bolster risk appetite, helping to lift dollar yen. So I think from this perspective that number one, it's going to stop any repatriation efforts that we've seen from Japanese officials because they no longer need to be so worried about the crisis in Japan. Number two, Japanese exporters don't need to hedge as aggressively. Part of the reason why we saw such a sharp sell-off in dollar yen last week was because once dollar yen broke its previous record low at 79.75, a lot of exporters had to come back in and hedge. And because their hedging efforts involved selling dollar yen, they had to join that move and sell dollar yen. But now that the BOJ has come in, the need for hedging by exporters has fallen significantly. So that's also something we will not see that much more of in this coming week. And then on top of that, we are seeing the fact that the Bank of Japan, they basically executed what we call non-sterilized intervention. So non-sterilized intervention is basically much more effective than sterilized intervention. And if you're not familiar with what non-sterilized intervention is, I actually wrote a little bit about this on my blog, and I'll just link you this article. So this article explains what exactly non-sterilized intervention means. Non-sterilized intervention is much more effective than sterilized intervention, and for those of you wondering, sterilized intervention basically involves offsetting intervention with the buying or selling of government bonds, whereas unsterilized intervention actually involves no changes to monetary base to offset the intervention, making it much more effective. So that means that it's a much more effective way of coming into the markets because they're basically not offsetting some of that flow. So for all these reasons, I do believe that the intervention effort will work and that the 79.50 to 80 area will probably be the bottom in dollar yen. Now, for those of you wondering, just in regards to the impact of the Japanese earthquake on the Japanese economy, there's been a lot of mixed forecasts. Even the banks can't get them right. Some people are saying that it could have, like for example, the World Bank thinks that the cost of the earthquake will range from 122 billion to 230 billion, which is about 2.5% to 4% of GDP. Citigroup thinks it's going to be approximately 3% of GDP. Goldman thinks it's going to be 0.5% to 2%. The forecasts are all over the place. But I think that I would basically say it's more probably towards the end of that forecast than the high level, because much of the pain would have been caused by the strength of the yen. So now that the yen has kind of given up some of those gains, that's not going to be as significant. Also, one thing I want to point out before I move to some of the other currency pairs is that don't expect the G7 intervention to be repeated. The G7 made it very explicitly clear last week that it was a one-day intervention on March 18th only. So the BOJ could come into the markets again if dollar yen breaks below 80, but they would be doing it themselves. So any successive intervention efforts by the BOJ will probably be a lot less. But this is no big deal in terms of actual flow, because even in 1998 and in 1995, usually when they come in as a coordinated intervention effort, the domestic central bank, in the case Bank of Japan, always does a lot more than the other central banks. For example, according to my stats, in June 1998, the BOJ was responsible for 90% of the total yen purchases on the day of the intervention that they did with the Federal Reserve. In 1995, on July 7th and August 2nd of 1995, the BOJ's intervention accounted for 91% of the intervention flow. So it's no big deal that the other central banks are not coming in because they've done their work already, which is provide the psychological support. So Eric says, I was confused about you saying that it said agreed to join on March 18th. I did not read that as only one day. If you read the statements, and I will link to you the statements, it says explicitly that they were only going to come in on one day. So let me just link the G7 statement for you, for those of you that did not catch it. Oops. Okay. So G7 statement, it says here, this is the same case when they came in 2000. When they came into the markets in 2000, they also only came in one day. So that's not really something that is out of the ordinary. So that is the outlook for dollar yen. I think that, this rally is going to be sustained. It could fall a little bit maybe to 80, 79, 50 region, but we're probably looking for more consolidation with a bias to the upside in dollar yen. We also have a nice little risk rally, as we can see in the stock market. So, all of that is contributing to the move in dollar yen. So, before you ask me about the euro, any questions about the Japanese yen and the outlook for dollar yen? Okay, so let's move on to the euro. Let me refresh my chart for the euro dollar. Okay, so right now you should see my chart for the euro dollar. Many of you are all, have lots of colorful questions about the rally in the euro dollar and why it's happening. So right now the euro dollar is breaking above 142. It's trading pretty much as, the next level of major resistance is going to be this November high here at 142.80. There's a couple of reasons for why the euro dollar is so strong. But the main reason is because of the hawkishness of the ECB. About an hour ago, I would say maybe an hour and a half ago, we had ECB member Tumpel Gurganol, which I'm sure I'm butchering the name here, come out and tell us that basically the European Central Bank believes strong vigilance is needed. Now, if any of you have ever followed the actions of the European Central Bank, they're a central bank that hates surprising the market. Whenever they plan to do something, they will always telegraph it weeks in advance. So if they plan on raising interest rates, they will tell you they plan on raising interest rates as much as they can, and it'll remind you of this message over and over again. The reason is because when it actually happens, when they actually raise interest rates, they want to see as little volatility as possible in their currency. They want to basically, hopefully, they'll announce a rate hike and the currency won't move at all. That's their best case scenario. And that's why they love to let the market know in advance when they plan to raise interest rates. And this message we're hearing loud and clear from the ECB today through ECB Tumpel Gurganol's message this morning, saying that strong vigilance is necessary. About an hour after that, ECB President Trichet came into the markets and spoke as well. Talked a little bit about Japan, saying how awful it is. He's watching the impact of Japan carefully. But he reminded us that he would change nothing from what he said earlier this month, which, if you recall, basically he said that they're going to raise interest rates in April. He stressed the need to avoid second round effects and basically reinforced the message that they're planning to raise interest rates next month. And then at 11, ECB member Draghi came in and repeated that message all over again, saying that the ECB needs to act in a firm and timely manner. So this morning we had 3 ECB officials come in and basically tell us that, in a rather indirect, and although you can also argue in a fairly direct way, that they plan to raise interest rates in April despite the problems in Japan. Also, on top of that, earlier this morning, the Russian finance minister came out and said that they plan on adding Spanish debt back to the investments that their national funds can put money into. So even though we've had this huge sovereign debt crisis, the bond auctions from a lot of these Eurozone nations have still gone pretty well. And today's announcement from Russia, which is a pretty heavy hitter, was a strong vote of confidence for the euro dollar. And that's also another reason why the euro rose so much. So we're seeing, a lot of factors contributing to it. Also, let me show you the rate hike expectations that are happening. I have put together a chart of the rate hike expectations. Let me refresh my camera here. Okay, so this is the rate hike expectations. And you can see that the market's pricing in almost 50 to 75 basis points of tightening from the ECB by the end of the year. So the rate hike expectations are very, very aggressive. So one of you asked when the next ECB rate hike is scheduled for. It's scheduled for April 7th, and they always announce it at 7:45, followed by a press conference at 8:30. So that's pretty much what we're looking for. So all of these factors contributed to the aggressive rally in the euro-dollar. Now, on top of that, if you take a look at the intraday price action for the euro-dollar, and let me refresh my chart here. So you see this move over here in this area here. If you take a look at this move in this area here, it was not just a euro rally. We did see, a rally across many currency pairs, and that's kind of when we actually had ECB Trichet's comments come out of the wire. And also, the dollar is kind of doing poorly overall because this is a chart of dollar yen, and you can see that dollar yen is also kind of melting down during that same period. So all of these factors are contributing to the rise in the euro dollar. So let me kind of revisit some of these questions that you have in the euro dollar. And if I missed it, please type it in again. So one of you are asking, so what news wires provides all these information the central bank are speaking? You can get it pretty much at any news wire from your broker. If your broker does not offer a news wire, you probably want to change your broker. Real-time news these days are available, by pretty much anyone. So the ECB and BOE will raise rates before the Fed. I think that's pretty much a certainty, Harley. If you take a look back at these rate hike expectations, let me show you the BOE. So this is the BOE rate hike expectations. It's changed a little bit from last month. Last month, the market's pricing in 3 interest rate hikes from the BOE. And right now, we're looking at 1, maybe 1.5, so somewhere between 1 and 2 rate hikes from the BOE by the end of the year. So the market definitely expects both central banks to move before the Fed. The best we'll get from the Federal Reserve is for them to end their QE programs in June. And that's something that could very well happen because this morning the Treasury announced that they were going to gradually unwind their purchases of mortgage-backed securities, which is a step towards ending the asset purchases in June. I've actually been tweeting about this all day long. So if those of you don't follow me on Twitter already, please do so because, all the reasons why the euro dollar was rising, falling throughout the day, I've been tweeting it all throughout the day. But obviously I'm not tweeting now because I'm talking to all of you. So, is a weak dollar here to stay? I think that, interest rate differentials are certainly going to favor more US dollar weakness. Also, if we have a lot of the stability in the markets, that's going to help the markets as well. Also, on top of that, wars and military conflicts tend to be positive for the stock market, especially when people believe that there is going to be a quick victory and a relatively speedy resolution like everyone's expecting right now in terms of Libya. So if stocks continue to rise, that'll be good for risk appetite, which will be bearish for the US dollar. In fact, the intention to support the yen. From the perspective of the value of the yen, if the ECB raises interest rates, it should be positive for the euro dollar, which would lift euro yen. From an economic perspective, it will possibly hurt demand from German companies of Japanese exports. So it could negatively affect the yen right that way, but that's more of a longer term effect. In the short term, it will probably depress the yen more against the euro. Will the euro fall after the disappointment of an ECB rate hike in April? Well, that really depends upon what the ECB telegraphs. If they say that it's a one-off move and they just plan to raise interest rates in April and don't plan on doing it again afterwards, then the euro could fall, and it probably will do that. If they say, okay, we raise interest rates and more needs to be done, then that would be positive for the euro. So it's really a matter of what Trichet says after the press conference. Well, on the long-term euro trade after pullback, 143 was broken and holds next stop is 150. Yes, next resistance level in the euro dollar beyond the high that we saw in November is 150. Would it help if one is good or has a degree in economics to really have a solid understanding of Forex fundamentals? I think that it would certainly help to have a degree in economics, but people write about it all the time. I'm writing about it every single day. So I think that as long as you read my research, follow me on Twitter, my research on fx360.com or on FX Street, you already have a good sense of what everyone's watching. Here relatively quickly because I've only got about 8 minutes left. So let's go through our charts one by one. Pound dollar. Let me refresh my chart real quick. Pound dollar is doing very, very well today. It's basically trying to challenge its year-to-date highs. And this is not only a year-to-date high in the pound dollar, it is actually the highest level that we've seen in the pound dollar in more than a year. So this is a very significant move in the pound dollar. And the reason why the pound dollar is doing so well is, number one, we've got risk appetite going on. So the market's seeing safe haven flows ease out of the US dollar. Number two, we've got the BOE minutes and the CPI release coming out over the next 48 to 72 hours. Now, even though the Bank of England did not raise interest rates earlier this month, there's a very, very good chance that more than one another BOE official voted in favor of raising interest rates, which would be very hawkish for the pound dollar because it would basically say that the Bank of England is looking to tighten monetary policy more, or they're getting closer to do that, so that would basically be positive for the pound. So as a result, I think that there's a very good chance, especially if CPI is hot tomorrow, that the pound dollar could challenge its 1-year highs, which its 1-year highs are basically at the 163 level. And if it breaks above 163, then there's no major resistance to about 165. If, however, we get a disappointment CPI release and only 3 members vote in favor of a rate hike and we don't get a fourth, then the pound dollar come crashing down because actually UK economic data has not been so good. And at the end of the week, there's a very good chance we could see retail sales numbers come out soft. So what happens in the next 48 hours in terms of the CPI release, BOE minutes will be very, very important. Next up, Canadian dollar. We'll get to the Swissy. It's on my list. Is there a way to find out if the rate hike is already priced in, perhaps through the OIS, overnight interest rate swap? Yes. That's where you basically see whether the market's priced in the rate hikes or not. And I publish that on my blog every so often, the calculation. CAD. Let me refresh my screen for the CAD. Hold on one second. Okay, the Canadian dollar is obviously doing very, very well, and it's doing very, very well because oil prices are at $102 a barrel. We've got a lot of, we don't have a lot. We have Canadian retail sales due for release tomorrow, and we also have leading indicators. Now, the Canadian economy has been doing fairly well. We've seen the labor market be fairly resilient. The BOC is not going to act at all as long as dollar CAD is trading below parity. Take a look at my rate hike expectations. I'll just link this to you so you can go back and forth later on so I don't have to refresh my screen constantly. This is the rate hike expectations. You will see that the market is not pricing in any rate hike from the Bank of Canada until the very end of the year, maybe in December. So as a result, dollar CAD's really going to trade on risk appetite and oil. If stock markets continue to rally and oil prices continue to rise, we could see dollar CAD come back down towards 97 cents. But I really don't think we'll see much more weakness in dollar CAD beyond 97 cents because then you're going to get a lot of negative drag on the Canadian economy. So I think that's really where, that this will probably end up being a double bottom in dollar CAD. Australian dollar, Aussie dollar doing very, very well, as you can see in this chart here. It's trading above parity. It's moving back into the area where it had been range trading before. And I think that you're going to see 102 parity, the new levels for Aussie dollar. RBA is not really looking to raise interest rates. Aussie is benefiting just from the improvement in the risk rally. They will be hurt a bit from the earthquake in Japan, but since Japan is the second most important trading partner for Australia in the region, or basically period, they're going to be benefiting from the rebuilding efforts of Japan. So Japan is going to be importing a lot more resources from Australia for the building efforts. So that will provide underlying support for the Australian economy. Probably move back up to around parity to 102 in the Aussie dollar. Kiwi dollar. You can see Kiwi dollar not doing nearly as well as the Aussie dollar. The reason is because the RBNZ cut interest rates by 50 basis points in their most recent meeting, which was a big shocker, and that obviously hurt the interest rate differentials of the Kiwi against a lot of other currencies. We also have a few pieces of data from New Zealand this week, the most important of which is going to be the GDP release. In the third quarter, the New Zealand's economy contracted, and the finance minister warned that the New Zealand economy may have contracted again in the fourth quarter, putting the country into a technical recession. The central bank came out and said, maybe not, maybe it's more like zero growth. Either way, it's negligible, which is very bad for New Zealand, and so that's why we're seeing underperformance in the Kiwi dollar. So I don't think we're really going to see much more strength in the Kiwi dollar, probably remain about below 75 cents for the time being. If it breaks back below 73 cents, however, which is today's open, then we could see a steeper slide towards 71.50. And then last, but certainly not least, the Swiss franc, what some of you have been asking about. Now, the Swiss franc is doing still very, very well. As I mentioned in the beginning of this talk, it was at a record high last week. Now, the reason why the Swiss franc is doing so well is because, number one, the Swiss franc is like the only safe haven currency left. Because from Japan, you've got a lot of, we had a lot of repatriation, we had a lot of, position adjustments that drove the yen higher. And then now you're having BOJ intervention come in and stop the yen from falling. So the threat of more intervention makes the yen not so attractive as a safe haven currency. Number two, the U.S. dollar, the U.S. fiscal finances are kind of weak, and it's not really, that great of a safe haven currency either. So the true safe haven currency left is the Swiss franc, and that's why it's doing so well. Number two, the Swiss National Bank met last week, and they upgraded their growth forecast, they upgraded their inflation forecast, and they were basically hawkish. They're not really looking to raise interest rates because the franc is so strong, but they're pretty optimistic. So economic data, number three, has been doing very, very well. So for these three reasons, the franc has been doing very, very well. It's obviously, kind of bottoming right now. So many of you may be wondering, okay, because we see a little bit more of a rally here in dollar Swiss. And we could. I think that we could probably see dollar Swiss maybe rally up to 92 cents. But if we have any other additional tensions in the market, it will prove to be much more beneficial for the Swiss franc than any of the other currencies. Do I expect the Swiss National Bank to come into the markets again? No, because the Swiss National Bank has admitted multiple times that they were very unsuccessful with their intervention efforts, and so they're not going to look to come into the markets. And more importantly, though, it's because of this chart here. The Swiss National Bank pays much more attention to Euro Swiss than dollar Swiss because they do the majority of their trade with the Eurozone and not with the U.S. So the value of Euro Swiss is much more important to them. So since Euro Swiss is not trading at a record low, and you can see I'm pulling up let's pull up a weekly chart here. The record low is closer to 125. They're not going to be as apt to come into the market. And plus, they think that the purchases of euros by the ECB and so forth will lift the euro, and the value of the euro and the hawkishness of the ECB could lift the euro and help to keep the franc from rising any further. So that's my take on all the majors. Obviously, market's very dynamic. Things can change. I encourage you to follow up on these market developments. You can read my blog, kathylien.com, or you could follow me on Twitter if you don't do so already at Kathy Lien FX. And if you have any questions, feel free to email me at Kathy at bk4xadvisors.com, or you can just come and comment on my blog or email me through my blog through the contact box. It's already 12:45, so I don't really have time for questions because I've got to move on to my other work. But hopefully this session has been useful for you to understand what the story behind intervention. I did a lot of analysis on this on my blog, so you can just read about it there, and email me if you have questions, all right? Thank you so much, and have a great week.